Ladies and gentlemen, it's my pleasure to welcome you to our quarterly presentation. We'll be presenting to you today Photon Energy's results for the fourth quarter 2020 and the full year 2020. I'm here today with Clemens Wollwood, our CFO.
Morning.
And we'll run you through the presentation today. So today we'll introduce you to our business model and give a few comments on our strategy and outlook. Clemens will then run you through the Q4 and full year 2020 results, and we have ample room for questions and answers at the end of today's session. So starting with the business model, we'll be going through the business model for our solar and the water business. So starting with solar, those of you who have been following our company for a while already know that we are a fully integrated downstream solar solutions company. What that means is that we cover the entire life cycle or value chain, looking at it financially, of a photovoltaic system. The life of a PV project starts with the project development, and this is a very important part of our business. Means we're doing in-house or sometimes in cooperation with external developers. The process starts with identifying a suitable location, which can be a rooftop or it can be a plot of land. That's what we refer to as greenfield projects. And we are involved in projects starting at as little as 300 kilowatt peak, which typically will be a rooftop, but we're also developing projects of sizes of up to 300 megawatts and pretty much everything in between. And the process is, after identifying land, we are trying to secure a grid connection to deliver electricity to the grid or an off-taker, and then running through the whole process of getting permits leading all the way up to the construction permit. The pipeline of projects then provides the basis for most of what we do further on. So the next step is that our EPC solution team gets involved in the design. We procure the components and build the power plants on a turnkey basis, and that is both for our own needs or for external customers. An important element of that is the procurement of the technology, and on the back of that, we have also built our distribution business called Photon Energy Technology, where we are also reselling key components like modules and inverters. And going forward, it will also be more and more mounting structures and battery systems, which we then sell to investors for specific projects, but also installation companies in several countries. Once a power plant is built, the journey only starts. The expected life of a PV plant is somewhere between 25 and 30 years, potentially even longer. But those power plants need to be taken care of. The first step is all good operational maintenance starts with monitoring. So we have developed our own monitoring solution. We run our own control room, and we service power plants through a combination of our own trained technicians and subcontractors in the specific locations. The goal is to maximize the uptime of power plants. That means to have them ready to produce. And one way how to maximize that uptime is through preventive maintenance. So that's a very strong focus of ours, where once or ideally twice a year, our technicians go and properly check power plants, replace components that have a limited life, so to make sure that incidents and downtimes are minimized. And we provide that service both to external customers, but also power plants that we own in our own portfolio. So this leads us to the last but very crucial pillar of our business, and that is that we invest into our own generation capacity, currently standing at 74.7 megawatts, mainly in Central Europe, and we're just about to commission another 14.6 in Australia that will be added to our portfolio, getting us to almost 90 megawatts. And of course, the goal for this year is to jump above the 100 megawatt mark. So this explains our business model on the solar side, and what we'd also like to do is to give a more detailed overview of our business model and the services we provide in our water services division, which has been part of our overall business for the last 4 years. One key service that we provide is solutions and services for the treatment of water, to a less extent also some wastewater treatment applications. And our customers here are water utilities, but also commercial companies that need proper water quality. Another area that we already explained in quite a bit of detail last quarter is our remediation business. So we're using our proprietary nanoremediation technology to remediate, that means clean groundwater. To be a quick reference to the last point, we are also conducting research and development work to apply our technology to surface water and soil that is contaminated with various chemicals. And a very important focus here are so-called PFAS chemicals. I will not go into more detail here, but you can easily Google that, PFAS. These are chemicals that are also referred to as forever chemicals, which are becoming a major concern worldwide. We are currently running a pilot project with the Australian Department of Defence, which has a large number of sites contaminated with PFAS, and the Australian government is actually the forefront of identifying PFAS as a risk and introducing strict regulations. We see that North America is another market, and slowly but surely also European regulators are waking up and are constantly reducing the allowed limits for PFAS chemicals in water, food, and other areas which can lead to harmful effects for human health. The next area is wells and resources. So we are providing mainly to water utilities services in relation to the maintenance and rejuvenation of water wells. Many water utilities run tens, if not hundreds, of water wells, which, as they age, need increased levels of maintenance. And at some point, after several decades of use, they need to be rejuvenated and restored so that the water volume and quality is in line with regulations. The next area and last area in terms of business focus is resource management, again focused on surface waters, mainly lakes and ponds, where we're using various technologies to provide services that improve the water quality. And the main focus of the last several years has been to fight blue-green algae growth, which has become a global problem for the quality of water bodies. And in some situations, these are water bodies where the water is used as drinking water, where of course poisonous blue algae then leads to very significant filtering needs. But also in many situations, we're talking about water bodies, lakes mainly, which are used for recreational purposes, and where also high levels of blue-green algae growth leads to situations where people are not allowed to swim. So that is a a very promising area. And coming back to our research and development, which of course is strongly focused on remediation, but we're also looking at new solutions in other areas. And our general approach is we want to bring our customers solutions, integrating, of course, based on our own technology, but we're also integrating new technologies, and the level of innovation is actually very inspiring in the area of water resource management. And we're trying to combine our own and third-party technologies to provide the best possible solution for the given situation. And while the water services arm has so far been relatively small, we are very confident that our water business will become a significant pillar of our overall business in the next couple of years. A few words on our presence. So our company is headquartered in Amsterdam, but in terms of service provision, we have our offices spread across the Czech Republic, where the company originally started 13 years ago, but we also today have offices in Warsaw and Łódź in Poland, in Bratislava in Slovakia, in Budapest in Hungary, Bucharest, Romania. We also have a small office in Switzerland. And outside Europe, we have been present in Australia through our office in Sydney since 2012. As you can see, we provide services to customers pretty much through the vast majority of continental Europe, and of course we serve the entire Australian market. We currently have a project development pipeline of over 800 megawatts, with a strong focus on Australia, Hungary, Poland, Romania. In our portfolio, we currently have 74.7 megawatts of installed capacity. This number will soon grow through the addition of another 14.6 megawatts in Australia. And of course, this year, through the continued build-out, we expect to exceed 100 megawatts by year end. On the O&M side, we are servicing well over 300 megawatts of PV plants. The vast majority of that is full service, but we also have a specialized technical service for PV inverters, which services around 60 megawatts of central inverters across Europe. So a few more details on our strategy and outlook. So as has been mentioned before, project development is for our business model an absolutely crucial part, and we are currently focusing our project development efforts in Australia and here in Central Europe, in Hungary, Poland, and Romania. So these are for us the key markets at the moment where we are involved in proprietary development. That means we are looking for land and develop those projects from scratch in-house. In those three markets, but also some neighboring markets in the region, we are also looking to work with developers that have already projects underway, but the key focus is on these three markets. So the goal is to feed the channel, and at the end of the process, we want to add as much capacity as we can to our proprietary power plant portfolio, and to further grow the recurring revenue stream that is provided through the sale of electricity. And while historically the solar power plants have been dependent on support, either through feed-in tariffs or contracts for difference, the future of solar is increasingly, and actually at a very dynamic speed, moving towards the sale of electricity on the market, and that can be either through a merchant approach or by signing PPAs, which stands for power purchase agreements, again either with energy traders, or it can be corporates, and then a very specific situation or a segment that we will focus very strongly going forward is commercial behind the meter, which means that we are building the PV generation capacity at or very near the site of a final user, and that can either take the form of a rooftop on buildings owned or rented by the off-taker, or it can be on a plot of land that's either within the compound or very close to the compound of the off-taker. The advantage of such a setup is that the electricity does not have to go through the public grid, and we are actually not competing with the wholesale market price of electricity, but the full electricity price that the energy user pays. That means including distribution charges, and very often there's also a string of taxes and charges that are added to the market price of electricity. So the economics of these projects are significantly better. The payback is significantly shorter, and we can create solutions that are financially attractive both for the off-taker and us as the investor. So we are the next area is that we are trying to further develop our external EPC project business, which we have mainly been focusing on in Australia, and these are either plain vanilla PV projects, but more and more including storage, so-called hybrid systems. We'll have a little bit more detail on those projects we've already done or in the process of implementing in a second. So Australia has been a testing ground for us, but we see storage becoming more and more important and playing an ever greater role also here in Europe and potentially some other markets that we're looking at, and in particular in those behind the meter situations. Our ambition is also to further grow our O&M business, and that's achieved in two ways. That's of course on the back of our growing proprietary portfolio, but we are also able to win more and more external business in the markets where we operate. And as there's a lot of international investors investing into PV assets in these markets, we are a very transparent and bankable counterparty taking care of the PV plans as an O&M provider, allowing us to actually grow with some of these investors as they grow their asset base. And although PV technology distribution has had a little less turnover last year than in 2019, not least because of the overall limitations on installations worldwide, but of course also in Central Europe, we see a significant pickup in demand, and we also believe that the volumes and financial results of our technology distribution business will improve further. Coming to water, we see in all the segments that I described earlier, growing demand, but the one area where we see the most significant growth potential is in the area of treating PFAS contaminated water, and either through an remediation. Here again, for us, that the pilot project with the Australian Department of Defence is very important, and once with positive results, we expect first of all a lot of opportunities with that customer, but also a lot of other potential customers in Australia, and based on that expected rollout in Australia, we will also try to win additional business in other parts of the world. North America is also at the forefront of regulating and pushing for the remediation of PFAS infested sites, and Europe is now also slowly waking up. So this is a very significant opportunity that we want to address in the next quarters. Just a quick wrap up and a bit more detail on our project development. So as mentioned before, the 4 markets where we are developing projects proactively are listed here. So one is Romania, where we, over the last quarter, we've been able to grow our pipeline from 87 to 105 megawatts. This is a market where we see a lot of opportunity. It has been a little bit forgotten in the last couple of years by the solar industry, but that is actually a good thing because we are able to identify new project opportunities, and we expect that number to keep growing dynamically throughout this year. Hungary is a market where we've been active now already for 5 years. We've already managed to build 49 megawatts, but of course we continue developing projects, and you can see that also the last quarter we've been able to grow the pipeline significantly. And again, we expect this market to remain a great source of additional capacity for our portfolio. In Poland, we have entered the market last year. We are approaching the market opportunities through several avenues. That is development from scratch, where we have put together a team of, we call them land seekers. That means we're going out into the field looking for suitable land, signing it up, so that we can start the development process. It's a very competitive market, but we still do see a lot of opportunities. But at the same time, we're also working with external developers and trying to team up to bring their most viable projects to the ready to build stage. So while the numbers are still small in comparison to the other markets where we operate, again, we expect very dynamic development over the next couple of months. These numbers are now so far only utility scale projects. What we also expect is a very dynamic development in behind the meter opportunities, which at the moment is a very promising area in Poland. We do also chase those opportunities in Romania and Hungary, but Poland, particularly after the recent increase in distribution costs for electricity, the economics are very attractive. Last but not least, Australia, where we have been involved in the development of large-scale projects for quite a while already. So we currently still continue co-developing a significant pipeline of almost 600 megawatts in cooperation with Canadian Solar. We also expect some progress on that pipeline later this year. So this has been an overview of our business model and our strategic focus, and I'm happy to hand over to Clemens, who will walk you through the financials for the fourth quarter and full year 2020.
Thank you, George. Good morning also from my side. I'm happy to present you our financial results for the fourth quarter 2020 and the full year as well. Those figures are unaudited yet, but give you already a clear view on what to expect. Before I go into the detail of the figures, let me recap quickly the key milestones, the highlights we had in the last quarter, which influence our financial figures. The most important, or what I want to point out first, is our commissioning of additional 40.1 megawatts in Hungary, in Puspokladany. George mentioned it already before, which brought our pipeline to 74.7 megawatts. This is the so far biggest project we have built and commissioned. We also secured in Hungary long-term financing for our project portfolio, additional long-term financing with CIB Bank for 17.6 megawatts in addition. So this helps us to free up additional liquidity. We have come a very long way in our soon-to-be biggest project in our portfolio, or two projects actually, in Leeton in Australia. with 14.6 megawatts together. Those projects have been built and are right now in the commissioning phase. So we hope to commission them until the end of this month actually, and then start feeding electricity into the grid. So this is about our proprietary portfolio and how that is growing. On the other side, we also could finish the project we have built last year in Lord Howe Island. George mentioned it as well. Very interesting solar and storage off-grid solution on Lord Howe Island, which we are very proud of, where we combined not only the traditional PV technology, but also battery storage with Tesla batteries. So much to the highlights for construction and our proprietary portfolio. On the other side, what we also are very happy to that we have achieved and to announced is the listing of our shares on the main markets of the Warsaw Stock Exchange and the Prague Stock Exchange, which was shortly after followed also on a listing on the quotation board of the Frankfurt Stock Exchange. So we hope that with this upgrade of our share listings, our share will become more attractive to institutional investors, but also easier to trade or to buy for investors in the Eurozone who don't want to bear the risk of foreign exchanges towards the euro. Last but not least, we also entered into a new strategic partnership that we invested into Lerta, which is a Polish company that is developing virtual power plant technologies, and very interesting investment for us going forward, not only for the Polish market, but also in other Central European markets. Taking this into our development, I already mentioned the 74.7 megawatts of proprietary portfolio. We have grown last year by 23 megawatts in total, only in the last quarter by 14.1, which also helped us to grow our electricity generation significantly by, for the whole year, 60% to 70 gigawatt hours. Only the fourth quarter is 7.7 gigawatt hours, which is an increase of 11.2% compared to last year, which you will see very soon in our, or I will show you very soon in the revenue figures, how that impacted our revenues and profitability. We also could grow our O&M business, not only with our own power plants we brought into the grid, but also with external customers. In total, we grew by 33 megawatts, so that we now provide services for over 309 megawatt of power plants. Part of it our own 74 megawatts proprietary portfolio, and the rest external customers. So what does this mean for the figures? Total revenues decreased a little for the whole year 28.3 million compared to 30 million. This is mainly impacted, as George mentioned just before, from the technology trading business, where we had, due to the pandemic situation, a little impact, temporary, we can see, and we are looking forward that this will be recovering soon. However, in all other areas, electricity generation, O&M business, we could grow our business, which also had a positive impact on the profitability on a gross profit level. As you can see, we grew from 15.4 million in the whole year to 17.7 million. On a gross profit, which also went through to the EBITDA level, where we grew by 3.2% to 8.2 million from 7.9 million previous year. This increase is not as big as the gross profit, as you can see clearly, because we also invested heavily, as George mentioned also before, into further development activities. So as you can see, we built up last year a portfolio or a pipeline of more than 200 megawatts in Hungary, in Romania, in Poland, which also requests some resources. So therefore, our overhead costs and HR costs increased. Bringing this down to the bottom line, the overall result, clearly with additional depreciation, which we had due to the additional power plants we connected, additional financial costs due to the increased bank loans and bond financing we did, our overall result declined compared to last year. So even on the other side, we had a positive effect on revaluation of our power plants, the existing portfolio, but also the new added power plants to the network. We had two compared to last year, negative impacts. One is a negative impact, which is a non-cash and non-realized loss, which comes from the turbulences in the financial market. So the Hungarian forint and the Czech crown, to which we have a certain exposure, have weakened towards the euro. Therefore, this has a negative impact in the revaluation of foreign currency exchanges, which was quite significant. And we had in 2019 an extraordinary gain from capital gains that we made by exiting the projects or selling the projects, the developed projects in Australia, which we so far have not repeated in 2020, but looking forward to exit further projects in Australia in the upcoming periods. So this brings us on a bottom line to a total comprehensive income, still positive of 2.1 million, compared to the nice 8 million we had in 2019. This is about the overall profitability. What does this mean for our balance sheet? Our balance sheet grew significantly to an overall sum of 160 million euros from 138 million euros in the previous year. This comes mainly from the fixed asset base that grew by adding our own portfolio, new power plants to our own portfolio, as mentioned already before, so that now we have a fixed asset base of 134.5 million compared to 106.5 million a year ago. On the active side, on the passive side, or what does it mean on the passive side? Liabilities grew as well. We have successfully refinanced our portfolio in Hungary long-term on non-recourse project finance. So basically the long-term liabilities went up from 88 to 105 million. Plus we also successfully increased our bond so that we have enough liquidity for further growth in our already mentioned markets. Equity also could be increased from a total comprehensive income of 2 million, as you have seen before, from 37.8 million to 39.6 million, a slight equity increase by 4.8%, which brings us to an adjusted total equity ratio of still 29%. So much about the balance sheet. On a cash flow side, what happened last year, we started the year with about 15 million in cash. We had a positive operating cash flow of 5.8 million, similar to the year before, a little lower only. We have invested all over about 20.2 million last year, compared to, you see 14.4 million, even though in this total, the real investments were higher in 2019 as well. However, we had the positive effect from divestments as well there. Therefore, the net effect was only the 14.4 million. On the other side, we have refinanced our portfolio, as mentioned, in total a positive cash flow from financing with 13.3 million, which brought us at the end of 2020 to a cash position of 14 million. Also in the last quarter, this effect was similar as for the whole year. So we had a slightly positive operating cash flow of 770,000 euros. We invested 5.8 million in Q4 only, refinanced 4.5 million net, so that we ended up, as mentioned, with the 14 million. Plus, we have secured additional financing, which we have not drawn down until the end of last year in Hungary. So which we are just drawing down right now, which is about additional 12.9 million, which gives us sufficient liquidity for our future growth plans that we have just outlined before. So much about the financials in giving you a quick overview for the last quarter, but also for the full year already. And we are now ready to answer any questions you might have.
Okay, thank you, Clemens. So we can see been quite a few questions already, so thank you very much for that. So the first question is asking for more information about our deal with Lerta, an investment in Lerta. So first of all, a little bit of background. We invested into a early stage fund in Poland called Valuetech about 4 years ago, and Lerta is one of the investee companies. So it's it's actually the thing that we hoped for, that through our investment in this early stage fund, we will identify companies that could be interesting for us. So that has actually materialized, and we decided to participate in this latest financing round because we like the team and the vision, and we have also agreed on a close strategic cooperation, and the match is actually a very good one, because Lerta itself has developed a virtual power plant. The company has gained access to the capacity market in Poland, so it is already growing very dynamically in relation to services around this virtual power plant. But they're also working on an energy trading license in Poland, and also in some of the other markets where we are operational. It's Hungary and Romania. So the idea is to cooperate very closely on the sale of electricity from power plants that we intend to build as investments. May also be applicable to some EPC customers of ours, and also to find ways how to generate ancillary revenues through the capacity market, either from the power plants themselves or also by adding storage. So there is a really good match and potential for them to support our growth and particularly make it easier. But at the same time, we also believe that the volume that we can bring them will help the company grow. So it's a really interesting and very promising strategic match, which of course our combined work will then determine how successful it is. But we are very excited about this investment and the cooperation potential. So the second question relates to our development activities in Poland and plans, and I believe that there is the next question is very similar, asking about our business goals on the Polish market this year, next year, and there's a third question relating to the use of trackers and bifacial panels in general and in Poland in particular. So I will merge my answer, merge those questions to provide a comprehensive answer. So for us, the Polish market is, of course, very promising. We started having a very close look, including building up an initial team in the Polish market already in 2019. We formalized our market entry last summer after almost a year of preparation work. So there's a lot of opportunity in utility scale, where, as I mentioned before, we have put together a team of, as we call them, land seekers, who are going out identifying and signing up land leases, then for our internal team to take over and secure grid connection and all of the permits needed. And then we have the segment of behind the meter opportunities, where we are also through our own channels looking for potential customers, but that's also an area, actually an additional area, where we cooperate very closely with Lerta, both to find customers, but also to provide a comprehensive solution. And it's very difficult to plan volumes, particularly in project development, where in addition to our internal efforts, we're also working with external developers. What we do see is that the project development process in Poland is slightly different to what we have in Hungary and Romania and I've seen other markets, which means that there are certain permits that need to be put in place before we can even ask for grid capacity. So in Hungary and Romania, we secure the land through a pre-agreement and we can ask for capacity, whereas in Poland we need to already have environmental and zoning permits, which mean that we already need to have a very clear idea what the technical solution that we'll use will look like. And this ties in with the question about trackers and bifacial modules. So I can confirm that all our project development in Hungary, in Romania, but also in Poland, talking about the utility scale, is based on using single-axis trackers and also bifacial modules. The yield increase through trackers is somewhere between 10 and 15%, and with bifacial modules, that's a little bit of an open question because the experience with that technology is relatively short. And just to explain, bifacial modules are modules that with the back side of the panel is also used to capture light and produce electricity. So our general assumption is that bifacial modules will add somewhere between 5 and 10% to the annual production. Theoretically, also more is possible, but it simply depends on the so-called albedo. That means the indirect light. So this whole effect can be helped by having reflective surfaces, which of course on a green field is a little bit difficult to implement. So typically on grassy surfaces, which will be the case in most projects, we expect somewhere between 5 and 10%. 5 of the 10 power plants that we build in Pushpokladany are using bifacial modules. The other 5 are monofacial. So we actually have a location where we can see the difference, but they've only been up and running for a few months. So I think we'll have a better view later in the year. But there is definitely a positive effect. The price difference between mono and bifacial modules has shrunk to such a point that it definitely makes sense to add them and use them. So this is and our in those 3 markets where we operate, we are in a situation where in Romania there's no support mechanism. In Hungary and Poland we have auctions. Coming back to the Polish market, we are not keen on developing or building or investing into power plants that are going through the auctions in the 1 megawatt basket. We may enter into the auctions with some larger projects going forward, but we are developing the projects with market prices in mind. So we're trying to design and develop them in such a way that they will be cost competitive on the market. And what is very interesting to see is that in the Polish market, the forward price for peak time electricity, which is the relevant price for PV plants, has exceeded 300 zlotys per megawatt hour for next year. And with such a price, PV plants are absolutely competitive. And it's very important to say that the market price today is materially above the prices achieved in the recent auction. So the market level is well above the auction level. And we believe that PV plants can and should be built on market prices. This is our focus. So we may use power purchase agreements. We maybe for a certain part of the electricity, larger scale projects we will be developing, we may enter the auctions, but it's not the main goal. We just see it as a tool to secure revenues potentially. But again, in a situation where market prices are so dramatically higher, of course, in Poland, mainly driven by the high prices for CO2 certificates. We believe that this is the concept to chase. It's a bit difficult to have. One thing is to plan. We from our experience, we know that reality is different. So I think our goals in the Polish market for this year are to, first of all, increase our pipeline. So at the moment we are above 20 megawatts. I think by the end of the year, our goal is definitely to have a 3-digit number of megawatts of projects in our pipeline. It will depend on the success of our land seekers. It will also depend on the quality of projects that development partners bring to the table. We are, I would say, very focused on projects where we can generate electricity at the lowest possible cost. And a lot of the projects we see in the Polish market have in that respect the defects in the form of land shapes which are not usable for us, very long connection lines which increase the investment cost and therefore don't allow us to build ultimately projects with a sufficiently low levelized cost of energy. So how many megawatts we'll have in our portfolio will be a link to those two questions: how successful we are in identifying projects and what projects we can secure. We do expect some behind-the-meter projects potentially also to be realized for our portfolio already this year. And of course, we want to develop our operations and maintenance business. In our technology distribution business, we've been selling into the Polish market for over 2 years already. And of course, volumes are growing, and we hope that and we expect the Polish market will be a significant driver in our growth in that business segment this year. The construction of PV plants for our proprietary portfolio in terms of utility scale projects, I think will only happen next year, the way things stand now. As a next question is about storage. Well, actually, there are 2 questions: whether hybrid opportunities, which we have mainly tackled in Australia so far, will be developed in Europe, and then what technologies we are using or considering. So the important trend is that energy storage technologies, which traditionally are mainly batteries, are constantly becoming cheaper. So they may also be used in different settings than 3 or 5 years ago. The issue in Europe is that, of course, there are very few real off-grid situations. In Australia, there's been many. This is why Australia has been such a good market, including Lord Howe as a true island with very little infrastructure. Of course, so far it has been very difficult to make the business case for 24/7 off-grid installations in Europe. However, what we do see is a growing opportunity, as I said, mainly in behind-the-meter situations for large off-takers to use batteries for peak shaving in combination with solar. I would say global trend is that energy distribution is becoming more and more expensive, and you see a lot of the costs being shifted to the capacity that's reserved by energy off-takers. And so any means that allows the off-taker to safely reduce the reserved capacity is valuable, and this is where we see a lot of potential for batteries. That means through solar installation we can reduce the volume and the peak to some extent, but then very often what we see are off-takers that need an additional boost in energy a couple of times a day, a couple of times a week, and that can be quite well covered through batteries, allowing a reduction in the reserved capacity, which is becoming more and more expensive. So those business cases are getting more and more convincing as batteries become cheaper. So we do expect more batteries being used. We've also been looking at alternative technologies to batteries. One of them, of course, is through investment in Regen, which is combining PV and concentrated solar, and has come up with a environmentally friendly and innovative way of storing electricity in the form of hot and cold water and organic Rankine cycle engines to turn that heat difference back into electricity. We are looking at the development of projects using the technology in Australia and some other locations in the world. The other technology we are evaluating is the technology from a company called Energy Vault, which is a Swiss company which uses concrete blocks which can be lowered and lifted and represent a viable alternative to pump hydro. And again, we have one or two projects where we are evaluating this technology for. So yes, we're looking at the broad spectrum. I'm sure over time we will also start looking at applications involving hydrogen as the technology becomes more mature and available.
Maybe I can take over the next question about
Revenues.
About the revenues. We mentioned before, or George mentioned before, about our technology business as well, that decreased in 2020, but we are looking forward for 21 that this will recover. Just to wrap up there a little, our technology revenues in 2019 used to be 6.2 million external business, which decreased to 3.2 million in 2020. However, we have been successful in increasing the gross profit margin on that business. So even though we had reduced revenues, the gross profit was not shrinking that much. But with this, and we are looking forward that also in this year, we will have a higher profitable or higher margin technology sales coming. How much the total figure will be, we are not giving forward-looking statements on our financials. However, we hope that we are recovering, and end of the day, the total gross profit should come back to where we used to be. Then the next question, I think, was for you, George.
So the next question is about the Czech PV market and the so-called modernization fund, which is some of the funds that, well, just to explain, this is a fund set up by the government, which should receive funding through the sale of excess CO2 certificates that the Czech Republic will be getting going forward. So the expectation is that this fund over time will have somewhere between 5 and 6 billion euros to disperse, and some of those funds are planned to be used as investment subsidies for PV projects. So and approximately exactly 2 weeks ago, it was possible to pre-register projects at any stage, so project concepts. We did pre-register a relatively large number of potential projects. The Czech market has been pretty much dead for the last couple of years in terms of new build-out. So there's been a lot of projects that were pre-registered by large utilities, but also private individuals and other solar companies. There's an expectation that there'll be a formal submission of projects later this year. So we have pre-registered a large number of projects. Some of them are greenfield, but the vast majority are actually for behind-the-meter use, where we are currently working and will be working with potential off-takers of electricity. So this is very early stage. This is why we're not talking about it actively. We also have to see how that fund will really work. I think anything related, any combination combining the Czech government and solar is something where we are very, very careful about, which leads to another question about potential further retroactive measures against PV plants built in 2009 and 10, which we of course have in our portfolio. So there's a new renewable energy law which has passed the first reading in Parliament, which could lead to reduction in feed-in tariffs. Before the second reading in Parliament, there will be a discussion and voting in two committees in Parliament, and of course this is a relatively messy process. The Solar Association and also other industry players are of course trying to be heard and to lead to a result that would have a good outcome for asset owners. I think we'll have to see. I mean, we can also see the political situation in this country. It's a tricky situation at this point in time to judge. We live in hope that there will be an acceptable outcome for solar asset and renewable asset owners in the Czech Republic. Of course, there have been retroactive measures in the past. Our view is that these are completely unjustified and unfair. And should there be a negative outcome, we've structured our investments in such a way, means we're holding our Czech power plants through a Swiss holding company. In case of retroactive measures, we are in a legal position, and we will definitely take legal action against the Czech government to recoup any losses created by any further retroactive measures taken by the government. But again, we still expect plan A is to expect an acceptable outcome. But I guess we will know more in the next couple of weeks and months.
Okay, I guess the last question was then about results by segment. Maybe I can say a few words to that. So we had, as mentioned, total turnover of 28.3 million euros last year. Of that is about 16.8 million coming from electricity generation. So the majority of it comes from the high profitable generation business that we have from our proprietary portfolio. The rest is distributed. On the one side, we had, if I take last year, and also when you look into our segment reporting, which we have published, there is each segment reports the total business, plus then there is including the internal business, which we provide for our own service lines as well. So you can see the split of revenues there in more detail. We have justified focus on the external business, which is this 28.3 million in revenues. Besides electricity generation, we had about 5.6 million coming from engineering business, mainly in Australia, that external business. We had about, I mentioned already before, 3.2 million technology sales and about 2.7 million external O&M business. The rest is then other services, under which we still report also the water business, which so far is small, but as we mentioned before in the strategy part, will be playing a key role in the future. Good. I think in this case we are at the end of the presentation of the Q&A session, and also running out a little of time. We started a little later. Sorry for that again from both of us here. And yeah, we are happy to.
Okay, there's a very last question that came.
Okay.
So the question of goes is the timing of the implementation of solar systems in Poland. So with respect to our own investments, we expect that this year we will implement or invest into some behind-the-meter installations, probably ranging from a few hundred kilowatts, maybe into the megawatt range. We're still working on the commercial and legal and regulatory framework of that service. So I guess that we'll still need a few weeks before we have a final product. We have multiple parties that are interested, where we believe that we can come to a conclusion and some implementation probably in the second half of the year. This year is still going to be a lot about developing greenfield projects, which will not be ready to build earlier than next year. We are not in the market to buy ready-to-build projects because we want to build them differently than how they're being developed in Poland. On the other hand, we may also have some opportunities to provide EPC services in the Polish market, but what is very well addressable and where we see growing volumes is the distribution of modules and inverters in the Polish market. So nevertheless, the Polish market is very important to us, and if I look 2-3 years down the road, I'm sure we'll have a very significant footprint, and a significant part of our portfolio will be comprised of Polish assets.
Good.
Great. Thank you very much. Of course, if there are any follow-up questions, please feel free to reach out to our investor relations colleagues, who will be able to answer these questions. And so thank you very much for your attention today, and we're looking forward to our next presentation 3 months from now.
In about 3 months.
Yes.
Thank you very much.
Thank you very much.
Goodbye.
Have a good week.